Yesterday, I talked about formula kind of a trading, which is like find a simple trading idea which has been perfected by others, or simple idea which has been around, and then use that and keep it very simple without adding complexities. Now, some of you have asked me questions, some of you got in touch with me as to how can you find your formula. Now, I found my formula in a book. I was reading a book many years ago by Mark Butcher. It's called Hedge Fund Age, in which there was a complete chapter on how to find short-term trading moves and trade them for 3 to 5 days. Taking that original idea, I developed on that particular thing. Similarly, you have like the canceling formula is detailed in all the books by William O'Neill, and which it goes in significant details in terms of how to go about finding it. Or Mark Minervini has a book on which he talks about how he finds his setup. In addition to that, beyond books, today you are in a very lucky situation because there are so many YouTube channel, there are so many blogs, there are so many Twitter accounts which go, which show you or which talk about their setup. And on Twitter especially, there is a gold mine of people whom you can like and basically look at their setup, try and understand that idea, because everybody has a different personality. Some people are inclined towards short-term trading. Some people are not inclined towards short-term trading. Some people want to hold for a longer duration. So no matter what your durational beliefs are, or whether you are risk tolerant, or whether you are a very risk seeking kind of a thing, or like you're an option player, or you're trading the indexes, there are people who are following a very formula kind of uh, approach to trading. Like on Twitter, there's a particular trader whom I follow, and what he does day in and day out is just like and basically charts these low price stocks which are up or gapping up in the morning. And every day you see he posts like and it's a very formalistic kind of a approach this person follows, where he's just looking at these low priced $1 $2 kind of pumps and then shorts, right? Shorting pumps is a formula, and there are a lot of people you can find if you start looking at that as a formula, which is shorting pumps or shorting stocks which have like some sort of a abnormal gap in the morning, or for 2 or 3 days they have been up, and especially in the very low cap kind of a thing, right? Now there is an entire set of like tools these people use, the brokers which they use, they have some carry cost, all those things you will understand once you start exploring that option. Similarly, selling shorting parabolic short is another one of those kind of a formula kind of an approach, where like people look at stocks which have gone up a lot in last 5 days or 10 days or 1 month, and then try and find shorts on them. And some of those people were yesterday were having a very good day because their setup worked very well yesterday, because a lot of the stocks had gone parabolic in the last 1 week, and all of them or most of them collapsed. So that's another way to find those kind of things. The classical formula kind of approaches are buying breakouts from a consolidation, and for that you will find so many people on Twitter are essentially doing the same formula. They give a different name to it. They use a different terminology. They might use a different kind of a scan condition, or they might have a different liquidity condition. But buying a breakout in a stock which already has established first leg or has some amount of momentum is a very classical formula kind of an approach which has been around for so many years, and you can find many examples of executing the same formula from different people on that. Buying pullbacks is a very formulastic kind of a way of doing things for short-term trading. Again, you'll find a lot of people on Twitter. Now, Twitter is one source which you can find. On YouTube, you can find a lot of people who are doing similar kind of a thing. Like there are channels on YouTube which I've seen, which like that particular person only buys long things which are gapping down, as a certain amount of gap down when it happens, he's always buying, and that's only a setup which he trades. So that's again a formula kind of a thing, because there is a stock which has a bad news, it gaps down and it recovers. Now this is an observation which many of us have done, but this particular person has converted into a setup. So that is another case of a formula kind of an approach to doing this. So if you want to look for formulas, in the beginning, don't just get stuck with one person's formula or get enamored by one person's formula, because you don't know what is your personality, what will work for you. Look at different kind of formulas. And the other formula which is very well known is the earnings gaps episodic pivot, which is what I use as a setup for that. Other people call it price earnings gap, some other people have some other names for it, but essentially it's a idea, or it's a formula kind of an approach to find these moves which happens based on earnings news. There is similarly a very formula kind of a day trading idea which is traded by large number of day traders, which is stocks in play. Now stocks in play is some stock which is like basically has a news last night or today morning, and then for that particular day that particular stock will have a big move up or down. Now stocks in play is widely used, and you will see thousands of videos on stocks in play on YouTube. So look for a formula kind of an approach where there is very simplicity, like there are steps and the steps are detailed, and you can see how that particular thing works. As far as my formula, you can go to my public blog. You can see like I have written a lot about momentum burst, or I have written a lot about anticipation. In fact, and almost for a year and a half, every day I used to write about anticipation. So those are some of my formula. The key to finding a formula is to find a formula which fits your personality, and also find a formula which also trades frequently if you are a new trader, because something which trades frequently is easier to understand or easier to implement, because then in a short period of time you can get a repeated trials and learn. Something which is infrequently based method, something which finds a trade once in 3 months or 6 months, is going to be difficult to trade. So if you are looking for a formula, I would say go to books, go to blogs, go to Twitter, go to YouTube, and look around and you'll see formula.